Good morning, traders. It is Wednesday, August 16th. Haven't recorded a video in about 12 days. I was taking some time off. My previous video, I really wanted to set you up with some good technical analysis, and I wanted to show you what I felt the market was going to be doing while I was gone. So let's start with the market in this particular video. How a stock gets from point A to point B matters. Same thing with the index. In that video, please go back and watch it because it has so much good technical analysis in it. And if you watch it now, you can actually see if that technical analysis helped me to predict price movement. I'd mentioned that this was a nice little breakout, but I didn't like the previous price action that I had seen in the S&P 500. I'd mentioned to you that we had this gap up and this immediate check here, the depth of this check told me that there are sellers. And so now we recover, but these candles are tiny, tiny bodied candles and we're breaking out to a high. I had said, this is a nice breakout. You can be long in here, but you have to be careful because the higher we go, the greater the chance of a pullback. And I had mentioned that later in the day, I am looking for a pullback. How did I know that? This was the tell. I also had some good tells on a D1 basis. So we're going to take a look at the daily in just a second. Here's how that day unfolded. So now you've got this nice green candle to a new high for the day. Beautiful little breakout. Can't advance. Well, now these two candles erase this long green candle. That tells us that sellers are there. If this was a legitimate breakout and buyers were super aggressive, you never would have retraced that entire candle. Now we can see that there's going to be some selling pressure. You get another one of these red candles in here. Now we have some nice orderly price action and we're taking out the open from this long green candle. So in the chat room, I'd mentioned to everyone I would be getting short here. So you can see how price action really starting to weaken. And there you go. So I'm also going to take a look at the daily chart and I'll make reference to what I was pointing out there. This was a bearish engulfing candle off of a 52-week high. That is not a good sign. And August 4th was right in here. So let me hover over so you can see this candle here at the time of the recording was actually a long green candle. We were moving higher and it looked like, hey, this is a nice little pullback here to buy. And we found support and now we're starting to get back into this red candle and we could challenge the high. I had mentioned watch for a long red candle. That is going to be a sign that these bounces are hammered right back down and that sellers are aggressive. Yesterday, I came back from vacation. Actually, I came back a couple days ago and I had posted in the chat room, said, I think we're due for a bounce here. We had been drifting lower and lower, and that is what I had mentioned in the video, that these were signs of selling pressure. And so Sunday evening, the market was going to be opening on a soft note, and that is the price action right there. But the market was able to bounce, and I had said, I think we're going to get a little bit of a bounce here. We've seen some pretty steady selling, and now what I want to see after this bounce is I want to see this long green candle hammered right back down. That's a sign that sellers are aggressive. So I believe the market is going to be pulling back. That's bearing out in the price action that we've seen recently. The market has been drifting, drifting, drifting lower, and now we're breaking the 50-day moving average. So let's overlay that. And you can see that has been breached right there. So yesterday in the chat room, we were definitely favoring the short side. That worked out very well for us, and you can see how the market gapped down. Let's go into the 5-minute chart and we'll take a look at what happened yesterday. And there's your little gap down. And then we had some stacked candles in here This is a pretty substantial move. Here's another tell. So we come in, and the price action on Monday, we had this little gap down, and buyers instantly came in and they gobbled it up. So this was the little bounce that I had showed you on the daily chart. Okay, good. So as a bear, what do I want to see? Well, I want to see this erased instantly, and it was within about the first half an hour of trading yesterday. This set us up for a very bearish day. You can see we had a tiny little bounce in here. Eventually, we started to make lower highs, and we took out the low of the day very convincingly. I believe the market is going to continue to move lower. So a little bit of fundamental analysis. Credit concerns are starting to surface, particularly in China. China is a source of weakness. They've not seen a robust rebound after reopening. Everyone was expecting that. Their economy has been struggling. The unemployment rate for youth age 16 to 25, most of who are college educated, is 25%. It's a huge number. China is going to stop publishing that number for obvious reasons. It's not good. They've recently released some economic news, industrial production, retail sales, both lower than expected. So we're starting to see some softness in China. Their market has not rebounded like our market has. So this has been a warning sign for the last year, in my opinion. Second largest economy in the world. And now their property developers are starting to default with greater frequency. Also, not a good sign. Commercial property development, 20% of China's economic activity. It's substantial. And this is August. The Fed is in recess. Everybody starts to get nervous when no one is minding the shop. So that's why you see some selling pressure in August and September. Plus, you have all the mega cap tech stocks out of the way right now. They've all reported their earnings. Yes, Nvidia is coming up, so that is now a mega cap tech stock, but the air gets let out of the balloon. All of this excitement. These are the stocks that drive the market higher, and once they report, short sellers get a little more aggressive. They're not going to be short selling before those announcements, but once they've gotten past those earnings releases, then they start to get more aggressive. So that's also something that we see. This little drift lower, you can see how orderly it is and how persistent it is. And now you're through that 50-day moving average. Now we're also challenging this upward sloping trend line, and it actually has been breached. So it doesn't quite line up with this mark, so I probably should delete it and redraw it. So I'm going to do that. In any event, this upward sloping trend line that starts here has been breached, and now we're starting to break the major moving averages. So I'm not even going to be able to draw that because it's already been violated. I'm looking for some shorts in here. Let's take a look at the stocks that I highlighted in my previous video. Didn't know what the market was going to do, so I wanted to make sure that I provided you with some longs and some shorts. XOM was one of the longs that I had highlighted, and I said, you know, I like this breakout right in here. So this is the August 4th candle. Do not buy this breakout. We want to buy a dip in the stock, and we want to see that 200-day moving average, the blue line. We want to see that preserved. And we want a pullback to be very minor. So that's why we're going to set an alert so that when the stock has relative weakness and then relative strength, we want to see, because right here it was strong relative to the market, we want to see what the price action has been. And if it takes out, can't hold this, and it takes out the 100-day, then it's not ready. So you can see how the stock pulled back. Now, any alert that we would get already tells us that this is fairly weak price action. So I would not have done anything with it. And in this instance, I would have been looking to sell an at the money bullish put spread keying on support at the 100-day moving average. Would not have done that trade given this price action and given the price action in the market. But if you had, you still would be in pretty decent shape because even though the market's been drifting lower, the stock has been able to preserve most of its gains and maintain that strength. Another stock that I highlighted on the long side was W. I had mentioned that I also liked this major breakout here through horizontal was resistance, now support, and you can see how the stock pulled back in here, all fine, still hovering right around that technical support level and doing pretty well. Would I sell an out of the money bullish put spread on W? No reason to do that when I've got this type of price action. When the market finds support, we start seeing some nice green candles in here that start stacking and telling me that this is a bearish flag formation. I'm not expecting that. If that were to happen, then yes, this would be a nice candidate. And I really like that longer term breakout through that horizontal resistance level, now support. But as it stands right now, no, there's no reason. There's no reason to trade the long side, not even a neutral to slightly bullish strategy because the market is breaking down. So I also highlighted some shorts as well. One of those shorts was, and I gave you quite a few because I was going to be taking time off. I wanted to make sure you had plenty to look at. SQ was a short that I highlighted. I mentioned in that video, you've got a long red candle like this. This was August 4th, so this was what we were looking at. We had a breakdown through this upward sloping trend line, blew through all the major moving averages after earnings. So that was the weakness we were looking for. I had mentioned in that video specifically. So again, please go back and watch it. This analysis is very valid. I'm looking for a bounce where half of this long red candle is preserved right there. Couldn't get higher, couldn't challenge that 100-day moving average. The suggestion was to sell an out of the money call credit spread keying off of the 67.50 call, sell the 67.50 70 call spread for 50 cents. Hello. Could have also just done a put debit spread and fared very well. So that was an excellent pick. CCL was another one that I had mentioned watching on the short side. You can see this upward sloping trend line that was breached. There's your August 4th candle. But again, what we're looking for is let's wait for that little bounce. Let's wait for the stock to have some relative strength on a 5 or 15-minute basis, and then let's wait for it to go relatively weak, and let's see how high it was able to bounce. In this case, it stayed suppressed, and it fell back below this upward sloping trend line. Yes, this is a nice short, especially when it broke that horizontal support and now we're below the 50-day moving average. Yeah, this is a nice short. I'd also mentioned Tesla as a good short. So August 4th was right up in here. You can see how the stock is right above the 50-day moving average. So we wanted to see that taken out, and we wanted to see this trend line right in here breached. There you go. And now the stock has fallen from, let's call it the 243 level was the low, all the way down to 228. Another nice pick. Let's zoom out and take a look at where this trend line comes into play. See if it's close to the current price action. This is a significant trend line, and we are testing it right now. We get through this trend line, the 100-day moving average is easy for it to hit. I might just stop right here and say, hey, Tesla looks like a good short to me. It really does. And I want to keep this video fairly short because I'm still trying to get back into the market, trying to get my head straight, trying to get my bearings, trying to catch up on a lot of work that was pending during my vacation, so I need to keep this fairly short. But let me take a look and see if we've got anything else that lines up. I like that Tesla short. So we're going to go in and we'll take a quick look and just flip a few charts. I'm going to go in here and get a bit of a longer term perspective. Flip through, see what we've got. SE nasty. This stock is going to go lower. You can see these nice long red candles, big breakdown. Now, a lot of people, a lot of traders, it's like, oh, I can't short this. It's already fallen so far. This is a sign of aggressive selling. If you have this stock in your portfolio, you're thinking, get rid of this shit. I don't want it. But that's not how a lot of traders think. They think, oh, this might even be a pretty good buy because this stock has been strong before and maybe it can get back up here. That's not how you should be looking at it. This is a long-term upward sloping trend line, very valid when it's breached. With that level of conviction, you know, and look at that selling pressure. These guys are dumping those shares. Would I go in and take a longer term short on this for 4, 5, 6 weeks? Well, it's going to bounce in here somewhere. But on a day trading basis or an overnight swing, you bet you can short stocks like this. The same thing holds true on really big breakouts. So right now, that stock looks like a good day trading short, but that train has left the station. Don't be afraid to sell new lows or to buy new highs. So I'm just going to click through a few of these. I just want to see if there's anything that really catches my eye here. Spotify, and these are auto drawn trend lines on Option Stalker Pro. This is a nice little breakdown in here. And this stock has had relative weakness. There's your earnings announcement. You can see how the stock gapped down earnings before the open, breaks that 100-day moving average, tries to get back up and fill in some of this gap. Not going to happen. Now it's back below the 100-day moving average and it starts breaking this upward sloping trend line. This is a good short. So yes, I like spot. That's going to be a decent short. I don't know how many more of these I'm going to be able to click through. I can also go into my Royal Flush. There's a pretty long-term technical breakdown there. We can zoom out just a little bit more, see where that trend line comes into play there. Yeah, that's a pretty significant trend line. We've also got this horizontal trend line in here that's been breached. It's below the 200-day moving average. Win looks weak. By the way, ding, 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 problems in China. Economic growth in China slow. Win generates most of its gambling revenues in Macau, China. Wonder if economic weakness might spill over to the casinos. Well, obviously, that's what the big money is thinking, and that is why you're starting to see this stock break down technically. So, yeah, I like that short as well. Let's go into Royal Flush, take a look, and see if there's anything else in here that looks good. This is a nice little technical breakdown right here through the 100-day moving average, through the upward sloping trend line. And actually, it doesn't touch in here, so I'm suspecting that this trend line dates further back. Okay, there we go. So now you can see where those points actually connect. And yes, we have a good breakdown there. So, yeah, that would not be a bad one. NTR was that symbol. Tech is one that we were shorting yesterday. I really like this one too. This could be my short of the video, and then I'm going to stop because I'm going to have too many stocks to review in my next video. But I do like this short also. Let's zoom out and take a look at those longer term trend lines. So we'll go way out because we've got another one coming in. You see these touch points here? That's a very long-term trend line that dates all the way back to July 14th, over a year ago. That's a nice breakdown. You're below all the major moving averages. You've got a couple of other technical breakdowns here a few days ago. Yeah, I think TECK is a very nice short, and you're below all the major moving averages, just breaking that 200-day moving average, long red candle on heavy volume. So I need to conclude with one thing here. Pete told me I need to short tech, so I'm going to come in and I'm going to short tech right on the open because it's weak. No, look at this choppy price action in here. This stock does not go straight up or straight down. Oh, gee, I think I'll short this breakdown in here. Well, if you're day trading, that's fine. That's a nice breakdown below the 100-day moving average, and then you start seeing follow through selling the next day. Beautiful, great. You can catch this part of the move. But then as soon as that move starts to compress and consolidate, you've got to be out of the stock because it chops around. So doing, you're right back up. So if you take a 1 month swing trade on this, you're going to get short in here and you're going to be super bummed out right in here because all of those beautiful gains just vaporized. So in the context of a choppy stock, what you want to do is you want to set alerts. You want to wait for the stock to go from relative weakness, which it's in right now. So you choose maybe a 15-minute, 30-minute, 1-hour basis, and you wait for that stock to gain some relative strength and then go relatively weak again. And what these alerts allow you to do is they allow you to come in and evaluate the price action that's unfolded. So the price action I would be looking for when that happens is that the stock cannot get through the 200-day moving average. It tries, it tries, it tries. Ideally, it can't even get through the open of this long red candle. So as it gets relatively strong, it just can't even get through that most basic technical resistance level. And then when it starts to roll over, if the market's continuing to drift lower and the stock can't get up in here, then it's going to be a good short because it's probably going to give you a nice another leg lower. So your entry will be excellent. Instead of trying to chase it here and then on a swing basis for a day or two, it looks good, everything's working fine, and then doink, it rallies back up and you're left holding the bag. You don't need to do that right now. These are overlapping candles. The volume is fairly light in August. There's no news. There are traders taking vacation time off right now. The price action is negative, but not overly so because these are overlapping candles and we are in a bull market. Look at the strength of that trend. Bull markets die hard. So on every little drop, bounce. Every little drop, bounce. Every little drop, bounce. Are we drifting lower? Yes. Do you need to be aggressively short? No. In 2022, we were seeing stacked red candles with no reprieve, no overlap, no rest. That is aggressive selling. That is when you can chase stocks on the short side. In this market, wait for those failed bounces. Wait for that really wimpy type of bounce in the stock, and then you're going to have a good entry point for the next leg lower. Thanks so much for watching, everyone. I'll get back on track. I'll be doing my 2 videos per week. I'll do one Sunday night so that I can give you a recap of what's happened over the last couple of days. And we'll get back on track very quickly. Hope some of you are taking vacation time off. Really good time to do that. We will see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.